Good evening, everyone. So markets closed. Let's recap all the assets. Just as a very quick summary, I reckon we're going to get a bit of a reversal from what we've seen the last couple of days. So markets, I do actually expect more downside. Dollar, I expect it to go up. Interest rate, I expect to go down. Gold and silver up, if I had to guess. Well, basically markets down and bonds up, you know. So rates down. It's just a bit of fear, and therefore gold and silver up, even Bitcoin up. Um, and that's despite no terrible news out. Remember, if there's any surprise news, it's going to be bad news. I think we've got the best case scenarios priced in. You know, everyone fumbling over each other that AI is going to increase productivity, and you've just got these valuations that make no sense. Anyway, which is why the Nasdaq's gone up in particular the last couple of days at least. So if you remember, we had a bit of a breakout, maybe a fake out. Look at the S&P, you know, had a nice close. We had a bit of a sort of, back test of breakout, a little doji here, what you would consider sort of consolidation before the move higher. But look at that, bam, down we go today, close near low of day, down over 1%. I mean, if you really get extra zoomed in about it, I would add this, and you could say we're even touching it again here. I think we're going to test this part here, basically, this horizontal line. I'm going to delete this because any move lower, obviously it's about the close, but then we're instantly negating this line. I think we are at this line. It may have served the purpose today, but if we go a bit lower, you've got 409 maybe here, you could say is a mini, intraday bounce zone, but I actually think we're going to go down here and test this. This is a very obvious horizontal line, and it'll make more sense when I start looking at things like the Dow. Look at that, we're already there. So imagine the Dow closing here below 33,000 in particular. I think by then you've got the S&P sort of running down here. So in my opinion, I think we've got the S&P going to go lower. The Nasdaq, which remember has gone up way too much. I know we've got the European markets making new all-time highs in some cases. But just focus on the Nasdaq. Everything's relative, and that's been going up crazy for the last decade plus. It's a bit like the S&P, had a very nice close above resistance. Everything looked good, a bit of sideways action. Today, a small retracement. To be honest, even if you had the Dow Jones, which we're going to get to in a second, just closing below that 33,000, looking very bearish. The Russell also, and the S&P coming down. If the Nasdaq comes all the way back down here, it's still bullish, and I don't believe in it fundamentally, but technically it's not bearish at all. For me, it's bearish once it closes below this ascending line. So if we have the Nasdaq coming down here, retest of whatever you want to call it, 320-ish, this entire zone should be sort of support, especially with the ascending. This should be pretty strong. Let's admit it. I mean, it will come down, it's testing a horizontal breakout. There's a lot of chop around here, plus the ascending. So for me, if the markets start to go lower, the Nasdaq will start to find support there. And then when the Nasdaq starts to find support there, obviously it will translate to these other stock markets going higher, also finding support. But still, I expect to move lower. Dow Jones, I mean, look, to me, this is very weak. And the Dow and the Russell for me are really the fundamental, I mean, a more fundamental representation of the US economy than the Nasdaq, which is just some cyberspace related stocks. Obviously, they have, there are realistic earnings and there's substance behind them. But if you had to choose two, for me, it would be actually the Dow, the industry, and the Russell 2000, which is or any version of the Russell. So really industry plus small business, rather than just these S&Ps, which pretty much include the same stocks, let's be honest, Apple and all this. So for me, the Dow Jones looks very weak. Tomorrow, tomorrow it could actually close below the low of this wick here. And then I think it's pretty hard to ignore, and then we start to move lower, not in a straight line. Obviously, these stocks, the S&P, when it starts to move down here, it'll find support. The Nasdaq, when it starts to move down there, it'll find support. So there'll probably be a bounce before we go all the way down here. But I think that the direction is down. And finally, the Russell, look at this. This is pretty much as ugly as it gets. Just when you thought, and I said there'd be a lot of resistance here, Look at that, right in between the channel. It just thought it got above here, and it did. Reject, close at low of day. I know it's down the least, not even down 0.5%, pretty much 0.5%, but close at low of day, upside down wick. It's just you shall not pass. What were you thinking? And as these all go down, this will come back down, yeah, basically to 172-ish. And if there's any continuation, this could accelerate to the downside. And, you know, it takes just a couple of trading days and you're at the bear market lows. You're at the bear market lows. You know, imagine how long that would take for the Nasdaq. That would probably take a month of hardcore destruction. And this would take just a bad week or two. So, yeah, and the Dow Jones, you know, I mean, yeah, it's pretty far off it, but just a couple of bad weeks and it becomes inevitable. So for me, we're going to go lower. Yeah, tomorrow also. But again, watch for the breakouts of the strong markets like the S&P, like the Nasdaq. Okay, let's look at the banking sector, which for me drags down the Russell and the Dow, but it shouldn't drag down the Dow. It will, but you know, it's more directly correlated to the Russell, especially these smaller regional banks. The XLF was actually red, whereas the others weren't, so that's quite interesting. But yeah, we'll take a look. I mean, the XLF is nowhere near as weak as the KBE and the KRE, but look, close at low of day. If there's any further continuation, which I expect there will be, we're straight back down to the 31, 30, to be honest, low 31 zone. I mean, yeah, for me, just this horizontal line, I'm not going to add another one over here. I think in 1 or 2 days, 2 bad days, we're basically testing this area. And yeah, 3, 4, 5 trading days, we could easily be testing this low here, which is essentially the low of the bear market. So just like the Russell, you know, really not that far off, but even worse. And that's the XLF. Once we look at the KBE, which yes, has rallied more, but remember, we had a massive run the last couple of days, and the things that are most destroyed will bounce the most. So this had a nice bounce. Look at this, just like the Russell, to be honest, massive rejection. If there's any sort of continuation to the downside, maybe 1 or 2 days, we start to flush this 34 zone, and then, you know, we start to go lower. KRE, exactly the same thing. Oh, I forgot to draw the descending, but look at this descending that I drew maybe last time. Touched it, perfect technicals. Remember, when you close beyond the descending, for me, that's the best chart, but so far it's acting as very, very strong resistance. And yeah, just like the KBE, you know, let's see if it goes low with the markets tomorrow. I think it will actually. And then you start to watch out. I don't think we're just going to have 3 or 4 red days and test. I think we'll have 1 or 2, then a small bounce. But, you know, maybe in 1.5 weeks, we start to flush to new lows. Very, very possible. Okay, that's the banks. Let's look at interest rates, the most important thing out there now. I mentioned rates were going up. They're looking to go up. They felt like they naturally wanted to go up. They can go down any moment on a scary day where everyone is into the fear trade, risk off. And I do actually think that might come tomorrow. I think we might have a bit of a rates down day tomorrow, just because it's a bit like the markets. Rates just seem to have a bit of a reversal candle today. But, you know, they've had a great couple of weeks, you could say. Look at the 1 year, though. For me, the 1 year is the most spectacular. Closed above 5%, kept going, a bit like the markets, you know, nice close above resistance, kept going, but now a bit of a reversal. I think the markets will go down more than rates. But you know, maybe have 1 or 2 down, not much of a down day, a sideways day, but I do think the 1 year wants to go and test its old high. And I think that it will, unless just a bank starts to, you know, a significant bank, especially a medium tier or even a top tier bank starts to wobble, then you could have another one of these, you know, massive drops as everyone freaks out. So, but otherwise, it naturally wants to keep going up, just maybe technically a little overbought. On the 1 year, the 2 year, same thing, same sort of reversal candle. A lot of resistance today, so maybe a bit of a retest, and you know, maybe it overdoes it a little bit. Because look how many green days we've had. That's the 2 year, probably the most important one. And it's the same, they just get a bit weaker as you go along. So 5 year resistance here, just around resistance. 10 year, Same thing, just a bit above. So, you know, look at how many green candles we've had. So it makes sense just to go sideways. I still think it is bullish. So whether we have one or two down days, I think it still wants to go back up. 30 years, same thing. And look at that, that actually hit its resistance perfectly, actually. So, and that, you know, that took out, that was been stronger than the 10, the 5. That's just gone up to its top level. So a bit of sideways action. Who knows? It could even retrace a little bit more, retest, and then start to go up. But it all depends on what the 1 and the 2 year are doing by then, because I still think that some bank is going to come out and just flush. And I think even Yellen said it the other day, expect some mergers, expect more mergers. I think they know that more banks are in trouble, and maybe even more significant banks, you know, the type of banks that we even have heard of, rather than PacWest and all these other things that now we know of, but you know, before the fact we didn't. So for me, yield's extremely important, the most important asset to watch. I just think they'll go down a little bit, but go back up eventually. So short-term bearish yields, medium-term bullish. Okay, the dollar. The dollar, unlike yields, I think wants to go higher. I said that before over here when we had a bit of a breakout, had a bit of a sideways move. Makes sense. We had a nice move, but look at this close today. Pretty decent. I think there was a bit of a, let me just delete this old stuff here, but I think today there was a bit of a up-down yo-yo effect. But it's about the close. Let me just do the 3 minute to see. Yeah, a bit of yo-yo, but it's all about the close. If you really want to zoom in, we could wait for a breakout of this. My favorite kind of chart to trade, but whoops. But otherwise, I think we're just going to go higher. Let's just imagine what happens. So tomorrow we have a nice day. We probably break higher. You know, maybe the dollar goes up with gold and bonds tomorrow. If the market goes down, imagine the market goes down, a bit of a retracement, or it gets carried away. There's like a -2% day. I don't even know what news is expected tomorrow, but just imagine there's a -2% market day. We haven't had that in a while. Today was really a -1%, maybe a little higher. You know, people will buy bonds, people buy gold, people probably buy the dollar this time. So this time you might have the dollar going up with gold and bonds. Makes sense. That's what usually was the norm. We just didn't have it during this period as the dollar came down with the news of de-dollarization. But, you know, here comes a dead cat bounce. It could continue. I think it will. You know, we've hit this line of resistance, which, to be honest, I'm quite happy I called, because it's not obvious, this line. It's kind of the middle of nowhere. I just sort of called it because of these 3 candles, and then we tested it once here. But so far, it looks like it's held for 3 days. It's acted as resistance. So, but okay, good close. If we continue, where do we go? If I had to guess, 105. And then these 2 lines here, obviously, these are resistance, 105.5-ish, just about a bit above. I just thought that if we start to go there, yeah, it kind of makes sense. You know, imagine we start to go there. It's not in 1 candle. It's probably in 6 candles. So we have a nice candle. We have like a red candle, whatever, another test. But the point is, whenever we get there, obviously it won't look like this, but it's more about the time horizon. It'll probably equate to us testing 3 triangulating trend lines, not just, for me, these are 2, you know, because this, or 1 big fat one that covers a bit of a thick area, but this descending one, I just have a feeling it's going to be perfectly timed. And the charts always end up being sort of perfect like that. So I'm just wondering if it will be the case. So yeah, I do feel like there's a bit of a magnet effect, and we might start moving to 105.5. And then if we do, strong resistance. Strong resistance has to go down. Even if it ends up breaking out, it has to go back down, and then we'll see what happens. But yeah, I just think there's too much resistance on the way up. I don't think the dollar will go all the way up here. I know that it's possible, and I should respect the possibility that it happens if we close above this, but we're weeks away. And I almost feel like for that to happen, there has to be total pandemonium, you know, like a liquidity crisis. I don't know, like 3 massive banks going down or something. But let's see. I just feel like the dollar will go up. So let's look at commodities. Start with copper. This, I need to learn to delete my trend lines before starting the video. But yeah, I do think we're going to go lower. So I was looking for a close below this ascending. We've had that today. Where do we go? Yes, this horizontal line first. Do we bounce? Depends what's happening everywhere else, but yeah, we probably bounce. I just feel like copper will go down with the markets, which it did today, but the dollar was up, so maybe that had an upsetting effect. But still, I just feel like the copper has to come a bit lower, especially after this close here, and especially because I think the markets go lower and the dollar will go higher. So combine those two, plus the fact that we closed below this ascending, I'm sorry, but in all likelihood, we go lower at least to here. So 3.55 on copper, in my opinion. Then we'll see, we might bounce, blah, blah, blah. It depends. Natural gas. Now, this was looking wonderful. It still is. You know, I think this is a meaningful breakout. Yes, a lot of people got carried away. There's a bit of profit taking and then over the top selling back down to pretty much 2.5, which used to be a bit of a level for me. I just happened to raise it up here because we tested that area on that wick day. So I just think this is a healthy retracement and we go back up. I don't even think it matters what the dollar does or what the market does. I think this is typical retracement of the breakout. We go back up and then we go to 3. So natural gas, and to be honest, you know, I was happy holding natural gas when it looked awful down here, like it was going to flush. It never did. So this could be the final retracement. So anyone who's not into natural gas, not in natural gas, I'm in it. So around this zone, maybe a bit higher. But I don't feel like buying this pullback because I've already bought this zone, if you know what I mean. But it's a good opportunity for those who think they missed the train. So yeah, I think it's going to go all the way up to 3. Oil. Now, this had to do this. I just thought, look, it's 1 or 2 days away from flushing or proving itself. I think today was a very, very useful day for the bulls. Close at high of day. I think it was the Saudi oil minister. Why not? I think it was a Saudi oil minister who came out and said, good luck to the shorts. We're going to crush you. No, not crush you. I made that up. But good luck to the shorts, basically saying we are going, you know, you're going to get squeezed soon. I think that scared a few people. Obviously, it acts as a nice catalyst. And maybe some people just thought, and me included, I thought there might be a flush on the way, you know, especially if we visit the low 60, 65, it would make the chart look bad. But so far, this long-term ascending has held. And maybe what he said was enough, you know, that it was the Saudis and their allies that pushed the cut in production, that pumped it up from sort of low 70s all the way up to 80s. And again, their jawboning helped pump it up today. So maybe probably will actually go all the way up to test 80. But let's see, you know, market might go down. I think it will. Dollar could go up. I don't know if the dollar has too much of an effect on oil, but it should put some pressure on it. So let's see. With oil, sorry, with the dollar going up and the market's going down, if oil continues to go up in that environment, then that's pretty bullish. So, but look, long term, I believe in oil as a commodity, and with what's going on in the world and the dollar fundamentally, et cetera, I think oil will go, you know, in the triple digits. Basically, it's just is it the best place to park your money at the moment? It's one of the best places. So yeah, middle of the range. If I had to guess, I would say we're going to go test 80. Uranium. Yeah, okay, a bit of a retracement day, but that looks really good. I didn't get to do a video yesterday, and when I saw uranium, I thought, no, you know, it was a bit like oil. I wasn't sure we're going to drop back down to here at least and find support. No, massive spike. This looks really bullish. Today is an irrelevant day. It's just okay, it was a massive spike. There's a bit of profit taking retracement. For me, this is going to just go higher. This wants to test this range, this 21 range. It wants to break out. And as soon as we close above 21, we go straight to 21.75, maybe test 22, but probably close below it because of this descending one. But for me, and I hate saying it, you know, we're going to sort of test, pump that, and basically we're going to hang around here, and then we're probably going to break above it. And then we'll see if we test that and then back down, you know, blah, blah, blah. something like that. Unfortunately, I wish I'm wrong, but I mean, this massive candle from yesterday, I don't even know if there was news. There must have been some news. It's quite ignorant of me for not knowing, but it's just the candle is quite a spike, and I just am wondering whether there was some news. Maybe there was a major uranium company that had some production news. I'm not sure actually. If you guys know, let me know. But it's a very nice candle after already spiking and retracing. So if you have another spike, I mean, unless you have a really bearish candle like tomorrow, you close below 20, then it's kind of the opposite actually. It'd be like double top rejection, but I just feel like any close above today's high, like 20 point whatever, 7, then we're gonna run here, and then we're probably gonna close here. And yeah, I don't know. If I had to guess, I'd say that's quite bullish. But and fundamentally I'm bullish, just like oil, just like gold, silver. Uranium is a very, very strong commodity to own long term. So yeah. Okay, gold and silver. So a bit of a whipsaw today. I believe we had a bit of a red start and then we closed nicely. But and that was with the dollar fluctuating also. You know, decent close. I remember silver was down 2% at one point. That also responded quite well. Gold was green, so that's quite good. So if you look at it, let's just look at the daily because that is the most important. You know, not the best day for silver, but still a bit of a hammer. Not like we closed at low of day. And I just feel like they're going to go up. Gold and silver will continue to go up if the markets go down. So, and gold was green. You know, gold actually looks better. Look at that. We're putting a bit of a bit of a decent support here at 1950, which is one of the zones that I identified. And we're just sort of closing at the next zone. So 19, for me, I made a rough estimate, 1975, 76, but in fact, if I go to the 50-minute chart, you might be able to, could you do something like that? If you really wanted to, you know, a little close, probably above 1980, definitely 1983, and then you start running higher. I don't like to have many lines, but I think that one, yeah, that's where I saw it on the daily of all places. So, okay, I'll leave it in. I'm used to having lots of lines sometimes too, so I can ignore some noise and delete it later. But I think the point is we're putting in a decent support in 1950. And, you know, if we have just one down day in the markets, which I think is coming, you could have gold moving up. Let's see, because I also think the dollar will go up. So if we have the dollar and gold going up, that could be good for gold because for precious metals holders, because gold starts to close anywhere higher, like I said, 1980, 1985, with the dollar going up because the market's going down. Well, what happens when the dollar goes down? What happens if the market continues to go down? Gold will go even higher. So, and then it starts to look good again. And then we're talking about the 2050 range. So let's see, let's see. I mean, I am prepared for more downside. Didn't buy anything today, didn't buy anything yesterday because I've kind of bought a little, I nibbled a little bit down here and I don't want to start going heavy. I'm already in quite heavy, to be honest. So I'm looking for the test of the ascending, and I'm talking about the miners, which I'll get to. But I have to admit, gold is holding up better than I thought. So, and remember, the dollar was up today. So, and silver, you know, bounced decently off its lows. It was down 2%, and then it's, you know, closes down a little less than 1%. That's okay. You know, that's still a close higher than the low of day during these periods. So, not the worst, bit of a hammer, but still, silver's underperforming gold, but that makes sense on the downside. Let's see. Let's see. I'm in no rush to add, so I'm just going to let it play out a little bit. There could be more downside, of course. The miners, okay, not as good a hammer as gold and silver, but still, you know, that's kind of bottomish action. We didn't close below the last low. GDXJ was actually doing better than GDX. That's pretty rare, especially on the downside. That just proved that the bounce was quite well. So, but you've got this descending line. You could also play here. For me, there's no rush. Let's see how gold and silver act. Gold still needs to prove itself, needs to close $5-10 higher than it is. Let's see how they react on with the markets and the dollar moving, in particular those two. So I'm still looking at the same things: the dollar, obviously interest rates, and the banking stocks. So still watching the same charts. But for me, downside, I'm sticking with the support and resistance I have. Yeah, I don't need to go into that much more detail. Bitcoin, finally, to be honest, it was quite decent today. Look at that. It's actually held this 26,000. And importantly, 26,500, it did not close below that. So that proves technically the close, not just the close, but it works. Technicals work. And we had flushes. I'm sure a lot of people have stop losses below 26,500. Look at the low of day here, 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 here. Flush, and then bought back, and it closed all the way here. I think more people pay attention to the close on the general stock markets than they do the Bitcoin markets, because it sort of closes at different periods. It's 24 hours a day, 7 days a week. But yeah, you can say that Bitcoin is not pretty strong, but not as weak. And to be honest, I reckon bonds will go up tomorrow. I reckon the market will go down. I reckon gold will go up tomorrow. And I think Bitcoin will go up if that fear environment takes hold, and especially if it's related to banking fears, because Bitcoin should do well and has done well with the banking fears. Remember this. And if we do, I do actually expect it to hit descending resistance where I've got this, which I'll delete, but I know where it is. So Bitcoin just doing stronger than I thought. But let's see what happens. Who knows? If the Nasdaq starts to flush, maybe Bitcoin goes down with it. Didn't happen today, but maybe that correlation will come back. It used to be the case, especially during the massive flush. Okay, that'll do. Thank you for watching. Let me know any thoughts you have. Otherwise, good luck. See you tomorrow.